We're joined by Greg Gibbs, Director of Currency Strategy at RBS Australia, and he joins us from Sydney. Greg, first off, what do you make of the markets? Do you think there's panic?
Yeah, look, there's not as much panic, I guess, as there could have been. It's an historic moment in the market's mind. And if you're sitting on the trading floors or in morning meetings and so on around Asia, you do sense there is this great degree of uncertainty still and a lack of willingness to really go out there and take on risk. And I think that's the main concern of the market at this point, that there's kind of a fatigue. We've been dealing with these issues for months. The equity markets have taken a big bath now, and we're into Q3 after a poor Q2, and risk appetite is just really low at this point in time.
Talk to me about the U.S. dollar, Greg, because as I'm saying, it's holding up much better than expected, just down by a third of 1%. Do you expect weakness in the coming months in the U.S. currency itself, or quite the opposite?
Well, it's certainly very weak against gold. It's weak against Swiss franc. It's weak against the yen. If it wasn't for the intervention from Japan, dollar yen would be lower. Euro's holding up well despite this European debt crisis being front and centre of the market's mind as well. So it's hard to really get a handle on where the dollar is in a broad sense. I mean, certainly it does feel quite weak to me, and I think long term it will remain very weak. But it's performing well against some of the growth orientated currencies like the Aussie and Kiwi at the moment.
Well, talk to me about dollar yen, because we heard from the finance minister once again from Japan this morning saying that G7 will do all it can to stabilize markets. Do you think, interpreted in terms of Japan, that means more intervention?
Well, the G7 has certainly done a lot over the last week. You've had the intervention, you've also had quantitative easing from Japan, you've had quantitative easing from the Swiss National Bank, you've had the ECB extend term liquidity facilities last week, and they did buy also Portuguese and Irish bonds. Now over the weekend they've announced they're going to buy Italian and Spanish bonds, which is probably quite important. So we really want to see how the European markets open. But overall the G7 have done quite a lot, but the market hasn't really responded in a big way yet. So look, I expect they will continue to push. But as I mentioned, risk appetite, confidence in the global economy has taken a real hit. I do expect the Japanese authorities to be there and continue to provide some support for dollar yen.
Okay, since we have major risk off on the markets, Greg, what are the best bets in currencies right now?
Well, I still like Asian currencies. Singapore, for instance, is still going to have a AAA rating. You don't want to be in the North Atlantic over the medium term. You can't put all your money into gold and Swiss franc. So I think ultimately you've still got to push your money into those stronger growing, more fiscally balanced countries with strong external balance as well in Asia. I mean, as you mentioned, the Chinese yuan setting at a record low. I mean, that's just going to continue to move in that direction. I think ultimately you can look at the Aussie and the Kiwi as being supported, but in the interim they're obviously going to be hurt by this downshift in risk appetite. But you take a medium-term view, you don't want to be in the euro, you don't want to be in the dollar, and you want to be in the Asia Pacific.
All right, there you go. Greg, thanks for your insights today.